trades on the day. Today we traded the signal strength trader. It was down minus 1550 roughly in live trading. We are down on the month about minus 1600 on a 250k portfolio. So we are down on the month. We're down on the day, minus 1550. And we came in today about break even. We're down minus about 0.7%, 0.7% on the month. Keeping our risks small. We're doing that with the signal strength trader, and this market's just extremely choppy. You see a trend from here to here that looks pretty good. It was seamless in the overnight as far as no gap down. So if you would have exited here and got back in here, but in the moment and in trading system world, at this level. Usually it's hard to short it at that level. There are ways to short at that level, but the trend doesn't really become clear until right about here, and then it closes, and then it comes back down here, and then it bounces all the way back to here. So the net trend between chop is the definition that I want to use. The net trend between horizontal channels is about this much, and so it's unusual. It's unusual to see so many choppy days and so many reversal days and so many days where the market doesn't trade below 1130. Pretty unprecedented. We get a lot of chop in the markets in general. Markets are tough, and we anticipate tough markets. We anticipate drawdowns, and we're keeping our risk small because it seems a bit extreme that the market chops as much as it does and doesn't have any real solid distribution or accumulation days. They're all just extreme choppy days. And we have strategies to trade chop, but we don't have strategies to trade extreme choppy days every day, all day, with extreme chop and reversals all the time. Today was a little bit of a decent trend, and you can see that with the Fibonacci indicator. I pulled that up here, and so it was possible to get in. The move from this high right here down to this low and measured back as part of a Fibonacci. The Fibonacci is the 61.8% is right there. Just generically testing Fibonacci's it doesn't work that great. But what I'm anticipating, I guess, the short side has been difficult. Now the short side is going to be a scenario where you get a short signal and the market bounces pretty good. And so one of the things we can do in our signal strength trader that I'm going to be testing this weekend is looking for the signal strength trader to either go +4 or -4, and then say if it's +4, the trend is up. Now wait for a drawdown or a Fibonacci retracement or some sort of momentum move down or RSI move down, and then we get in on a pullback. Same thing with the shorts. If the market position is -4, we don't go ahead and get in. We're going to wait for a bigger bounce, Fibonacci bounce, momentum higher, an RSI higher, and then we're going to go short. And so typically those don't work because a lot of times you get a complete reversal, and so the market goes down, and then if it bounces enough, it can completely reverse. And so a lot of V reversals in this market. One of the things I'm going to be researching this weekend is what I just described here. I've been putting together some more modules for the portfolio money management algorithm indicator area, and you can see how well some of these strategies have done that short the rallies. You can see the momentum fader type strategies and how well those have done in this market environment. Here's an RSI fader, and it's also done pretty well. This RSI fader setup has, by the way, I'm putting this in the portfolio money management algorithms area. This is not updated. And so this is the updated, and this RSI raw strategy without the portfolio money management. You can see how well it does on the short side. 40,000 on the long side, 41,000 on the short side. Pretty low drawdown for shorting a NASDAQ E-mini. So I look forward to testing that on our signal strength trader. This is the equity curve trading 8 contracts as a signal strength trader, and this drawdown right here is less than this drawdown. So this drawdown is slightly bigger than this drawdown. So we're waiting for it to bounce in this trend line of this signal strength trader, and the long side is better than the short side, but the trend has been up for a while. Now that the trend is down, we should get some down days. We should be able to short and be able to stay with the trade. It spends an hour and a half going 150 points higher, and so there should be some days where the market would bounce, but not bounce all the way to our stop loss and then roll over, or take an hour and a half to bounce that far. And so that's you typically get all different cycles in the market. Typically you'll get really choppy days. You'll get days that sell off and then have big reversals and then sell off again. You get days that rally, have big reversals and then rally again. You get complete reversals, up and then down, and then you'll get down and then up. And then you'll get trades that trend down, bounce a little bit, and then trend down. Trades that go up, go sideways, and then up, and they go sideways for a little bit or pull back a little bit. They don't all violently chop every day. And so the cycle of massive chop has been extreme. And so let's look at the money management indicators for the signal strength for the portfolio, stock index portfolio 34. It would be down 55, 67, 50. And so it's at the end of the day here, it's 3:23 Eastern. It's short one NASDAQ, long one S&P. It was short 4 here, got short 4 here, and then it's gone sideways all the rest of the day. After 11 o'clock, 11:30, it seems to be the pattern that typically we see patterns that will do that for a while, but they don't continuously do this. As long as this pattern has done this, it seems extreme again. How long this pattern has been around where it just stopped selling right at 11:30, regardless of the fundamentals. It's not as if Europe used to be some of the reason for market weakness, and that still seems to be an old pattern. Europe closes, and then the U.S. markets firm up. So here is an SR counter trend portfolio that I would like to trade. It's our conservative portfolio with one new setup, and it uses the $1,200 stop loss, $500 profit target added to the SR counter trend conservative. And you can see how cyclical this is. You can see how it's at equity peaks. And today it was up. If you look at it today, daily period analysis, this is multi-charts, up 950 today on 2 trades. Looks like there were 2 gold trades today that were profitable. And here is the latest portfolio calculator that I will upload to the website, and it includes the beta 48. You can see coming in today, it was only $4,000 away from its worst case drawdown. I want to take a look at that at the end of the day and see where it's at. We also have, coming into today, we had the beta 64. It was $6,000 away from its worst case drawdown. The beta 20, and it is, right here on the beta. This is actually 30 strategies. I've added some more. And then beta 20 plus SRCTs. It's 29 out of 33. And you can see the drawdown curve right here. And then, most of this is NASDAQ. If you look at all the strategies put together, the NASDAQ has been difficult. If you look at all strategies as of September the 15th, 2023, it's at a worst case drawdown. But if you remove the NASDAQ, it's not doing too bad. If you remove the NASDAQ and you just look at everything else but the NASDAQ, 55 out of 103. And so more volatility since the pandemic. You can see that in the drawdown curve. But some nice gains as well historically in these strategies. The last 2 months have just been, we're in unusual times with bonds and turmoil in the world as well, and everything going on in politics. So here is the S&P portfolio 21. It's down today around 1,600, I believe, and so we're looking at that one as well, locking into this setup. I'd like to see a drawdown to this 15,000 area at this point in this kind of market environment that we're in. And stock index portfolio 34. This doesn't look too bad because the Nasdaq's not included, so with just the S&P strategies, it doesn't look too bad. If you add the Nasdaq strategies back, 49 out of 57, and it's down again today. So this is what we were trading that we stopped right in here at this worst case drawdown to preserve capital. So more research over the weekend. Update this portfolio calculator again and look at using the single strength trader with bounces to short the rallies and buy the dips instead of getting in right away. And so that is the latest trades going into the weekend. Like I said, minus 0.7% on the month, and looking forward to. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.